Hey, welcome to the video. My name is Jake Hoskins. I'm gonna fill you in on what happened with this whole GameStop thing. There's been a lot of coverage on it in the not just the financial media, but in the mainstream news. And so I wanted to kind of explain how it unfolded and why it happened, and so maybe you can get a better idea of if this is a strategy you should be employing as an investor, or if it was just a one-time thing that was just kind of a market anomaly. So basically this started a little over a year ago on a chat forum called Reddit, and Reddit is really popular if you haven't heard of it. Basically there's discussion groups where people can get into groups and share ideas about a topic that they're interested in. And so in this case it was called WallStreetBets, where basically they talked about their investment ideas and bounced ideas off of each other. And so it all started with this one guy who was a value investor, which means he looks for underpriced companies, undervalued companies that he can buy what he believes is at a discount, and he believes the market will correct that price and the price will go up where he can sell it at a higher price. And so his target was GameStop, and basically he saw GameStop trading at less than $2 billion of market cap. GameStop has about 5,500 stores still open, and he saw basically video game consoles are largely still sold in stores, in physical retail stores. And so a lot of these 5,500 GameStop stores still had some revenue coming in. And for a company trading at less than $2 billion, he saw that as a good opportunity to unlock value. And then somewhere down the line, he and a few other investors started to realize just how heavily shorted GameStop was, and they believed that GameStop's share price was artificially low because there were so many of these hedge funds that had shorted GameStop. And so basically what happens when you short a stock is you sell it before you own it, which it sounds like a weird concept, but you can do it in the financial markets. So basically you have to borrow a share from your broker and then sell it into the open market. You're hoping that the price of the share goes down so that you can buy it back or cover your position at a lower price, and then you make a profit on how much each share went down basically. So anyway, there was a lot of hedge funds with billions and billions of dollars of assets that had shorted GameStop really heavily, and reportedly the number of shorted shares were more than the total amount of shares that were available in the market, so more than 100% of short interest. And so that was driving the price down really low, putting a lot of downward pressure on the stock price. This was the really brilliant thing that the Reddit community did with this. They all decided to pile in and started furiously buying GameStop stock, so that when the stock price of GameStop started to go up, these short positions that these big hedge funds had would have to start being covered, which means that the brokers of these hedge funds basically tell them, look, you're at negative 500% return on this position. You're either going to have to cover your position or give us some more money. And so basically what happens there is they're forced to buy the stock back. Once these Reddit traders get the stock price to go up a little bit, then the hedge funds and the short interest people have to come in and cover their position and buy it back. And so the price goes higher, and that's what's called a short squeeze, where people who shorted the stock are squeezed out of their position. They're forced to close their position. This is what creates that parabolic, almost straight up stock chart. And so somewhere along the way, the motivation went from a value investment where one guy thought GameStop was undervalued, and it turned into, oh, we can really burn these hedge funds that have a heavy short interest in GameStop. We can short squeeze them, and basically a lot of these hedge funds would go bankrupt, because when you short a stock, you have unlimited risk, you have unlimited loss potential, where if you short a stock at $20 or $30 like GameStop was, and then it goes to $300 or $400, well, you've now lost about 12 times what your initial investment was. So if you shorted $1 billion of GameStop, you would now owe $12 billion, just as example. And so you could see how these hedge funds really got into a lot of trouble. And so these Reddit traders were basically out for blood at this point. That's not what they originally intended, but they realized that they could short squeeze these hedge funds and basically bankrupt or nearly bankrupt a lot of them. And the main target was a hedge fund called Melvin Capital. And these WallStreetBets people really wanted to stick it to Melvin Capital because they had a really heavy short position in GameStop, a business that a lot of these traders really like. And basically they wanted to get revenge for being kept down by the big guy, by the Wall Street elites for so long, going back to 2008 and 2000, where these big Wall Street firms basically cost average people a lot of money and caused them a lot of hardship, and were never held accountable for that. And so this was kind of the payback for all of that. And the reason this story made it into the national news so prominently is because it was a story of David versus Goliath, and that's a really easy storyline to sell on the news. You know, people just eat that storyline up. And in this case, the little guy was crushing the big Wall Street hedge fund. And so it was a really fun, good, crazy story that was happening. And once it leaked out into the mainstream media, this discussion group on Reddit, WallStreetBets, that initially had couple million users, pretty much doubled overnight. And then you started to see a lot of other people getting into this stock and really driving the price higher. And there was so much activity on this theme of the short squeeze to break the hedge funds that it started spilling over out of GameStop and into stocks like AMC and like BlackBerry and Nokia. And there was really a lot of stocks that just went straight up, that went 10, 20x their stock price value just in a matter of days. And a lot of people made a lot of money, especially if they bought in early. But then it also induced some panic buying, which is never a good idea, because if you panic buy, odds are you probably bought at the top. You probably bought at the highest price. If you buy at the highest price, there's only one way to go, and that's down. And you lose a lot of money that way. A lot of people that bought GameStop at 300 or 350, and assuming it goes and settles back down under 100, they lost over 60% of their investment. And a lot of these people are people that can't afford to lose money, basically. These are your average retail investors. So my prediction is that GameStop's share price settles down under 100, probably between that like $30 and $100 range, and the other stocks like AMC and BlackBerry will settle down a little bit higher than where they were before, just because these hedge funds are scared to short these stocks again. So why am I giving you all this information about this GameStop mania? It's to first inform you so you know why it happened, and you can become a better investor, a better decision maker that way. And so in this situation, I would just say to exercise patience and discipline, and use your money wisely. And at this point in time, I probably wouldn't recommend going into GameStop or any other of those highly volatile Reddit trades, as they say, because odds are the price of these stocks is going to continue to sink down to previous levels. And if you buy in right now, you're going to end up losing some money. And I would encourage you to subscribe to my channel, because I'm going to be giving you a lot more tips about personal finance and about getting started in investing, so that you can compound your money over the long term at a really reliable rate, and you can have some financial stability going forward. So a lot of my videos are going to be about that. So subscribe and stay tuned in for the next video, and we'll get started on setting the foundation for how you can sustainably compound your money in the stock market over time, and not have to go with any of these crazy trades like we've seen this week.